What's going on, guys? My name is Richard and welcome back to another video. And today I'm going to be sharing my thoughts about whether or not I think these beaten down airline stocks represent good long-term investments. So we'll be talking about Spirit, we'll be talking about Delta, American, Southwest, and Boeing. And whatever your personal opinions are about this topic, please watch through this entire video, and at the end, whether you disagree or agree, let me know your thoughts down below in the comment section. And if you enjoy my analysis, please go ahead and leave a like on this video as well. It really does help me out and my channel. But anyway, getting into it, we'll be talking about all these major airlines that have been hit super hard from this pandemic. And looking at the chart of Spirit as an example, you can see that from the price in early 2020 at $47.50, that was the high. It's now sub 20. And this huge drop for a lot of people represents opportunity and value. But what I think these people fail to realize is how exactly price increases in the long term. Just because it's now sub 20 doesn't mean that after this is over, it'll get right back up to that previous high. And this is because you need a significant amount of demand to cause a stock to double and triple. And it would take an extraordinary amount of demand to overcome all this overhead supply, all this selling here, and get that stock back up to where it was before this pandemic. And the only way to get that demand is for a lot of institutions to jump back in to these stocks. And the reason that I think this is unlikely is because institutions have been selling these type of stocks over and over during this crash, because I think they see the long-term liability that these companies have. And this is true across the board. You can see drops in the most recent quarter of all these funds, and they're selling their shares. And when institutions are selling, that means that you as a retail investor should definitely not be buying, because you should respect this long-term trend. Personally, I only focus on stocks with an increasing trend of funds, and that's because I want to be following the smart money, the big institutions that really move the markets. So I focus on stocks that are like Shopify with a nice increasing trend from 683 almost 2 years ago to now 1,200 funds investing in this company. So all these new funds are soaking up that supply, which leads to only a little bit of demand rapidly increasing the stock's price, exactly what's been going on lately. And these type of funds invest in stocks that represent future growth in new industries. And the Computer Software Enterprise Group is number 1 out of 197, ranked by IBD. And there's a lot of stocks acting well as funds are acquiring shares. So I focus on these type of growth stocks. And if we compare the group actually to the airline, so let's go back to AAL, and you can see that instead of 1 out of 197, this is near last on their rank scale. It's 193 out of 197. So instead of focusing on the best stocks and the best groups, picking AAL as an investment would be focusing on one of the worst stocks in the worst groups. And for me, I don't see a good long-term benefit in investing in laggards, meaning stocks that are underperforming the market. And taking a look at the Marketsmith interface, you can see this relative strength line, which represents how the stock's price is performing relative to the overall market. You can see that even before this crash, AAL and a lot of these airline stocks were underperforming the market over the long term. And now you've got an RS rating of 3, meaning that this stock has only outperformed 3% of stocks over the past year. So this is about as bad as you can get. And scrolling back to a weekly time frame, you can see that for a long time, this RS line has been decreasing. And once again, I want to be investing in stocks with an increasing RS line that are outperforming the market. That's how you make good long-term wealth in the stock market. So now moving into TC2000, I want to talk a little bit more about the charts, because you can see all these stocks are up today with significant volume buzz, which is basically the amount of shares traded versus the normal average. So a significant volume buzz means that more shares are being traded and that there's more demand on that day than usual. So usually this is a good thing in the stocks I watch. I want to see a stock breaking out on above average volume buzz. But in this case, I think all this buying is driven by shorts covering. And you can see this in the chart. You can see short covering right here, another rally right here and here. And it never manages to overcome the significant resistance right here, and instead is decreasing even as the general market is moving up. And still, I think some people think that this is a great buy at this time because you can see it was at 50 right here, and right now it's at 10. So that's basically a 5-fold potential increase. But I think at this point, you're buying a falling knife. And to prove this point, I kind of want to get rid of all the price data, which can be a bit noisy, and focus on the trend. So to do that, I'll go to a guppy chart, and you can see it's in a blue, white, red downtrend. And what these are exponential moving averages. These are longer term in blue and shorter term in red. And I only want to be focusing on stocks that are in a red, white, blue uptrend. So let's go back to Shopify to give an example of that. You can see it's in a red, white, blue uptrend, and these trends can last months, even years. And in this period, it's very easy to make money trading this stock. But when it's in a blue, white, red pattern, as AAL is, it's much harder to make money in the long side. So either short this stock, although I wouldn't be shorting in a new bull market, or you want to be just completely leaving these stocks alone. And if you are dead set on buying these airline companies because you think they present value, what I suggest is for you to not try to guess the bottom and instead buy back when the uptrend is established and it's now in a red, white, blue pattern. That should get you pretty close to the bottom, honestly, and it would suggest that the stock has proven itself and it's ready to start another move upward. And these stocks can be very good stocks. If we go back to Boeing a couple of years ago, from 2016 to 2018, this was a monster winner. And that's when you want to be buying a stock, when it's in a long-term red, white, blue uptrend. And you can even go to a weekly chart and see that at this point from 2016 all the way to late 2018, this was in a red, white, blue weekly pattern, and you can just hold this and write it out for an easy double. But you can see now we're in a blue, white, red downtrend on the weekly and the daily. So this is probably the worst time to buy if you are a trend follower. So that's pretty much it for the video. Thank you guys so much for watching. And if you enjoyed, please go ahead and leave a like down below. And if you disagree with my thoughts, that's perfectly fine. But I'd be happy to talk with you in the comment section below. Thanks again for watching, and I'll see you guys in future videos.